But we do see copper starting to back down. In fact, now down 3 days in a row at levels last seen closer to the election. So some people are revisiting those views, of course, as stockpiles for copper have been climbing for 6 days in a row. As for what could be ahead for copper, when we head into the Bloomberg and we take a look at #BTV 4984, this is a long-term chart of copper, a descending trend channel. Copper is in a bear market, but we do see most recently on the strength of copper this year, we see that the trend channel is starting to break out. Now, last week, I did have the honor of moderating a technical panel, and Rich Ross of Evercore ISI, he thinks that this breakout is for real. He thinks that copper is going to trend higher. However, Ari Wald, the head of technical analysis over at Oppenheimer, he takes the opposite view. He thinks that this is some sort of, maybe not a false initial reaction, but not a reaction that's going to remain. He thinks that copper is going to come down into that downtrend, although Ari Wald is bullish on stocks going ahead. So perhaps we'll see a bit of a divergence in 2017 if Ari Wald is correct between stocks higher and copper lower.
Thank you so much, Abigail. Great currency chart as always.
What'd you miss? Tom Lee, managing director of Fundstrat Global Advisors, was the most bullish strategist on Wall Street, and now the S&P 500 is setting highs near levels that he saw 2 years ago. Tom is here with us now.
All right, Tom, let's start out by checking out this chart here that basically is showing where your calls were in the S&P, because credit where credit is due. There are a lot of people panicking down here at multiple parts of these volatility events the past year. But guess what? 2014, we pretty much ended where you said we were going to end, and now we are climbing closer to that previously 23.25 call. Now you've got it at 22.25. So we're moving up there closer. Is this for the reasons that you had discussed for the past 2 years, or is this just the Trump boost that's getting us closer?
I think a lot of the gains made in the last few months were signaled really clearly by credit markets. So, you know, I think Trump gets credit for some things, but I think this is really a post-election rally that the derivatives markets were telling us would happen.
Is the lesson of 2016 to just ignore these political events that people get really worked up and they try to trade around them, and to just sort of look at the basic fundamental signals and not get too worked up with these event risk?
I mean, I think that's one of the lessons. I mean, I think the other is, you know, you really have to start to question the crowd, right? Because consensus really spent most of this year thinking we're going to have a recession, you know, expansion's over. It turns out all of a sudden, after November, all of a sudden everyone's excited about the economy. Nothing's changed.
Right. When you look at the reaction that some of your colleagues have had on Wall Street, and then overall just some of the flows, it does feel like people have gotten pretty bullish the past couple months. Obviously, you've been in that camp. Was this just sort of the catalyst that needed to wake people up to look at the fundamentals? When you look beyond Trump, what still is underlying that gets you excited about being in stocks?
Well, I mean, this is just proof that the difference between half empty and half full is like one micron of an atom, right? I mean, not that much has changed, and all of a sudden...
Trump's a pretty big atom.
Yes, but I think this reminds me of sort of the malaise that happened after the panic of 1907, right? You know, the country almost went bankrupt, and for years people were gloomy, and then suddenly they woke up 4 years later and got really optimistic. And I think tax and deregulation are good catalysts. And now all of a sudden, I think people are pretty optimistic. I mean, I think it's appropriate, but...
What do you make of the impact, potentially, of the rise in rates on stocks and the effect that that will have on multiples? Obviously, multiple expansion has been one of the big parts of this leg of the stock market, but theoretically, as rates go higher on bonds, that theoretically makes equities less attractive. How do you think about that?
Yeah, you know, one is, I think we probably all agree, low rates, we've reached the limits, and I think it's actually been negative. So higher rates is definitely better for risky markets. The level where higher rates becomes a headwind is unknown. I mean, one, remember, companies earn cash now, earn interest on their cash, so that's a good thing.
Right.
What's been worrisome is the yield curve has really flattened. Right. That's probably the thing I would worry more about than the level of rates.
When you look at... We've got about a month here left, right? So it's time to start thinking about the next year. But you also did remove your 23.25 target, brought it down a little bit. What are some of the headwinds? Is it just a matter of momentum that we've moved a little bit too quickly the past month or so? What is kind of working in the opposite direction?
Into year end?
Yeah.
Well, I mean, into year end, you know, we're 2 weeks from the end of the year, so I'm not really going to spend too much time thinking about the next 2 weeks because it's really hard tactically. But I mean, I think headwinds have developed. I mean, it's not that easy to say the markets. This year was an easy trade because high yield was up 18% this year. I mean, I know we've talked about it many times. High yield is a great leading indicator for equities. I think high yield would be lucky to be up 8% next year. Lucky, you know, and depending on what rates do, high yield may end up being a single-digit.
Besides high yield, what are some of the other headwinds that you see emerging for the market here?
Well, I think that there are areas where disappointment could clearly develop. One is infrastructure and stimulus. The other is tax policy. I mean, one, it's, you know, U.S. tax rates are already pretty low, and you know, as a former stock analyst, I've never really paid for tax earnings, so I don't think it's actually worth much to the stock market.
So when you say room to disappoint, is that just because the expectations have been put so high for some of these groups, like regulations on banks, industrial, and fiscal spending as well, these sort of Trump things that have gotten real popular?
I mean, yeah, let's face it, some people have written 2017 thesis for next year built on tax cuts. That's kind of silly, actually, I think. You know, I mean, like, can you imagine some guy saying, like, hey, look, I'm getting really bullish on Apple because their tax rate's going down? I mean, you know, it's not a fundamental basis for people to get bullish.
Right.
All right, Tom Lee, Fundstrat Global Advisor, Managing Partner. You'll be sticking around with us for a little while longer. We'll talk about what markets could look like next year. This is Bloomberg.
Now head back to Berlin for the latest on a truck that rammed into a Berlin Christmas market, killing at least 9. Joining us is Chad Thomas, Bloomberg News Berlin bureau chief. So what do we know here? We've seen some headlines coming in that there are indeed a death toll that's rising here. What do you know?
Yeah, we just had a press conference from Berlin police about 5 minutes ago. The police said that they have arrested the driver of that truck. He fled from the truck, the police said, and got about 200 yards away and then was arrested. There was also another individual in the truck, a passenger, and that person has died. In this incident, the police said that along with the 9 dead, that unfortunately there are more than 50 people that they're aware of that have been injured in this incident here. The police were asked about a motive. They said they're still investigating that at this point. Some German media are reporting that some police officials are considering this an attack. The police, though, officially in this press conference just a few minutes ago, said that they are not sure yet what the motive is behind the attack.
Chad, has there been any sort of response yet from German political leaders?
Joe, there hasn't been any response yet. This happened, I'm just looking at the time now, just over an hour and 45 minutes ago. We certainly would expect to hear something yet this evening from them, but at this point there hasn't been any response. And just to give you a little bit of flavor of where this happened, this took place in the west of Berlin, in a busy shopping district called Kudamm, and it's happened at a Christmas market there near a very well-known church that was destroyed during World War II. That church was not rebuilt. It has been left there as a memorial to the war, and the incident happened around the square around this church.
Chad, you just came back from a press conference. Are there any details on where they're taking the injured as they sort of assess the damage here?
We don't have any details on that. They're likely going to many of the area hospitals here in Berlin. There are several large world-class medical facilities in the city. It is the German capital. There's also a large military hospital that's not far from the scene where we are here in the office. Is probably about 2 miles roughly away from where the incident took place. So even here from the office, we could hear police sirens going by and heading toward the scene a little bit earlier this evening.
All right, Chad Thomas, Bloomberg News Berlin Bureau Chief. Thank you so much for being on call.
Turning back to the markets here in the U.S., 2017 is set to be another volatile year in politics and possibly for markets. We're back with Tom Lee, managing partner at Fundstrat Global Advisors. Tom, we know you haven't put out your 2017 outlook, but give us some hints of what kind of year 2017 is going to be.
It's going to have 12 months.
Some days up, some days down.
Some days up, some days down.
Well, let me ask you this, Tom. One of the theses, part of the thesis behind your bull call the past couple of years has been that there is not just cash on the sidelines, but an enormous amount of people moving out of the equity market. And a couple of weeks back, you had a note talking about the Titanic shift that you're looking at. Does that happen next year? What exactly is the nature of this shift?
It's a big number. Guys, it's households saved $7 trillion in the last decade, right? $7 trillion. They took $2 trillion out of stocks. So not only did they save money, they liquidated equity. So you have to think the next 10 years is mean reverting. Households might save another $7 trillion, but do they put $4 trillion into the stock market? You know, that's monstrous inflows.
Why does it mean reverting? I mean, could there be a demographic reason why people just have to reduce their risk over time? U.S. population is going to keep getting older for a while. Is there a reason this trend just couldn't keep going on for several years?
I mean, you can do it based on the saver, or you can do it on financial markets. Last year, there was $1.5 trillion of new bonds issued in the U.S., okay? Across all fixed income classes. That number is going to shrink this year. Let's say it's 1.1 trillion, right? Because deficits are shrinking and agency outstandings are shrinking. But the coupons paid on existing bonds is going to be like 1.4 trillion. There's a shortage of bonds anyways. I mean, if people keep buying and allocating to bonds, interest rates are going to go to zero in the U.S., even with inflation. So there's a mechanical restriction. They just can't buy. People just can't save and buy more bonds. So now stocks are a lot cheaper, right? Cisco pays a huge dividend, bigger dividend than its cost of debt. So I think it's easy to see how the money gets into equities just to generate income.
One of the big conversations, I think, of the past month or so since the election has been the crop up of dispersion within the marketplace. Stocks moving independently from another. Sectors are moving in opposite directions. How do you view that in your strategy when you think about whether or not that brings people into markets? I feel like one could make the argument that, hey, if you see stocks going in different directions, you think active management does well, maybe some of that money comes into stocks.
Yeah.
Or is dispersion and flows related at all?
They should be related. Dispersion should be correlated with active management performance. I don't know if it's going to be because it really depends on the experience level of a manager. I mean, the reality is the one challenge, and I've seen it with our clients this year, because people have only been using one playbook, which is growth, stocks, China, healthcare, consumer, every pullback they've been trying to buy 2015 greatest hits. And it's been hurting them, right? Like I'm sure you get guests talking about, hey, I want to buy healthcare because it's gotten reasonable. Healthcare's led by 4,000 basis points cumulatively over the last 5 years. Right. It's one of the biggest, in the cycle of healthcare returns since 1920. It's one of the biggest periods of outperformance. It's not going to keep outperforming.
So we've seen obviously some post-election shifts in what the leadership of this market looks like. Tech has kind of been pretty mediocre since the election, but the financials have been obviously on a tear. Another example of the staples, which people had loved for a long time, not doing so great.
Yeah.
Do you expect some of these new shifts to last for a while?
Yeah, I mean, I think you could almost count on it because, you take any of these industries, and we've been looking at 104 now. So we're really trying. I think next year is a lot more about not getting, it's being very zip code specific next year. Every group's mean reverting.
What does that mean, zip code specific?
Well, instead of looking at, let's say that value and growth is time zone, right? Eastern, and states are more like sectors. Zip code is what you call the GICS 4. On Bloomberg, I think it's about GICS 4 next year. And these groups they're mean reverting. They just look like big sine waves. You want to buy the bottom of the sine wave and avoid the ones at the top.
And speaking of buying the bottom of the sine wave, are you still buy the dip? Is that even though perhaps there's some adverse, headwinds here, market goes down 5%, market goes down 7% in the next, 6 months. Do you buy on that?
Yeah. Well, I mean, I'd say for sure the next 4 years, 5 years. Look, the lesson everyone should have learned by now is you got to buy the dips, okay? But I'm sure there's going to be a time within the next 5 years where one of these dips is going to be preceded by something warning you it's a wallop. And maybe people thought the wallop was going to happen this year. It hasn't happened, but it'll come.
It's interesting that the Fed's role in this market seems to have shifted a little bit. Janet Yellen gave a talk to some college graduates today, and on her talk, even though she didn't really get into economics, it was just a commencement talk, yield shot up a little bit. She's not necessarily the reliable dove that people may have thought for the last few years. Does the reorientation of the Fed towards a more inclined to hike, perhaps slightly more hawkish stance, change the calculus at all?
I would think that makes sense, doesn't it?
It makes sense.
Yeah, I mean, I would say you can't take. There are things that have changed, and I think central banks are changing their role, and maybe now it is a source of volatility. I mean, it's a different picture in the next few years.
All right.
Well, we will be watching as your 2017 outlook gets published. Earnings right now, about 142 expectation, but we'll have you back to find out what you're looking at next year. Thanks a lot, Tom Lee, Fundstrat Global Advisors Managing Partner.
Coming up, Swiss watch exports are on track to hit a 34-year low in 2016. We'll take a look at the struggling industry next. This is Bloomberg. What you miss, sales of Swiss watches at their lowest level since 1984. Actually, I'm looking at exports of Swiss watches in particular. This is early 80s, the last time they were this low. You know, in the 80s, there was this big Swiss watch craze. Maybe you remember the scene from Trading Places when he sold his Swiss watch to the pawn shop. They were a craze. But they've actually been in this steady, long sort of bear market. They're still this luxury thing, but on a volume basis, they're just not what they used to be. We continue to see decline all through the 90s and 2000s. A little bit of a bump lately, but really tumbled. Obviously, sort of reflective of high-value exports. The Asian consumer is really important to Swiss watches, but from a volume standpoint, not necessarily total price, but from a volume standpoint, this is an industry that's clearly seen better days. This is a pretty big, I feel like if you took a second order equation on this, that's a pretty fast drop. That is a really big drop. Dropped off. I'm actually looking at something maybe somewhat related if you're going to buy a Swiss watch for Christmas. This is from PNC Bank. It's a cool little sort of chart that they have that's basically looking at the Christmas price index. So it's an inflation that's very tied to the holiday season. This is the raw price of the 12 days of Christmas items, the song, if you bought everything, what's it going to cost, going back to about 1985. So it's going up and up and up. It's actually flatlined a little bit. What I'm charting down here on the bottom panel is the percent year-over-year change next to the CPI in purple as we know it. So while CPI is picking up a little bit, some inflation, your Christmas prices are basically the same. So I don't know if you want to extrapolate too much from it, but it's kind of a cool little inflation for Christmas. I'm still sort of curious how they actually get a price on Lord Zalipin and things like that. If you think about the, like 5 gold rings, sure, that's pretty easy to price. Yeah. But some of the other things, like you have. Well, I should also add, there's also a core Christmas price index. Oh, right. So you got to separate core from headlines. All right, let's take a quick look at the market close as we wrap up the trading day here in the green once again across the board, less than 4 minutes until the close. This is Bloomberg.
We are moments away from the closing bell. U.S. stocks pushing higher to start the week as Fed Chair Janet Yellen calls the job market the strongest in nearly a decade. I'm Oliver Rennick.
And I'm Joe Weisenthal. We want to welcome our viewers who are tuning in live on Twitter. You can watch our closing bell coverage on Twitter every weekday from 4 to 5 p.m. Eastern.
We begin with our market minutes. Look at stocks first, because it's been an interesting day as we started to pair some of the gains from earlier. But in particular, I want to check out what's been happening with some of the sectors. Basically, we were up close to about 40 basis points earlier on the day, and then we moved back around. The VIX also doing some pretty interesting stuff as we look at volatility. We actually had a pretty interesting story on the Bloomberg today about how the VIX versus volatility of volatility has been doing pretty weird stuff. There's the chart right there. They're basically separating where even though the VIX is pretty muted, volatility of the gauge itself is actually going up a bit. And then also check out just some of the sector moves today, because this has been an interesting story when you look at what's happening with some of the value and the safety plays that we thought were dead, but guess what? They're back. Real estate, infotech, telecom. So 2 out of the 3 of those leaders today pay pretty high dividends.
Some of those bond proxies gaining, and the reason for this is right here. Bonds rallying today, one of their bigger rallies in a while. Yields down across the board. You see it, the 10-year. 2.53, but let's look at dive intraday 10-year, because that's where a lot of the action is. It's some very interesting stuff. So yields were dropping throughout much of the day. When there was the incident in Ankara with the Russian ambassador getting shot, that caused an initial flight into safety, people buying treasuries. Then there was a little bump up in yields. That's 1:30 p.m. That was when Janet Yellen spoke to some college grads. It wasn't like a deep economic talk, but she was pretty upbeat on the U.S. economy and the labor market in particular. So people took that as kind of a hawkish sign. Then we saw the decline again in yields after the incident in Berlin with the truck going through the Christmas market. Again, once again, some of this geopolitical nervousness, and once again, a flight into safety. So a lot of sort of interesting sub-moves within a general decline in yields today.
A lot of back and forth that ultimately ended up where it was around 12:30. Looking at some of the currencies here, basically you got green in the dollar, and that's about it. We're looking at the Japanese yen, some weakness there, strength in the Japanese yen relative to the dollar. However, you look at the euro doing pretty weak next to the U.S. dollar. And then if we flip it over, we've also got what's going on in Turkey, of course, looking at what happened with the lira, just a massive spike in the dollar relative to the lira. So pretty weak currency in Turkey, of course, as we had the reports of the shooting, and that hasn't really changed. It's up about 60 bips relative to the
And
dollar.
at one point, the euro was below 104, so getting closer to that parity level. Finally, on commodities, big loser today, copper futures, some of those industrial metals, concerns that perhaps China is going to take efforts to cool its red-hot real estate market, causing some of the industrial metals to slip. Other than that, though, not a ton going on. And the commodity front, crude oil barely changed. Gold getting a little bit of a bid, but hardly anything, even with these geopolitical concerns rising up.
Yeah, outside copper, not a lot exciting in the material space and commodities. Those are today's market minutes. And now let's take a deep dive into the Bloomberg. You can find all the charts here using the function at the bottom of the screen, our #BTV library. Joe, what do you got?
All right, today is a puzzle chart because it was sent in Friday by Bloomberg user Mark Dow, and I didn't get a chance to run it, but I think it's very interesting. Check out this chart and ask yourself, do you think it's heading up or down? Would you buy or sell this right now? It looks like it bottomed really sharply in 2010 or to early 2016. It's been surging lately. Is it a reversal? Well, it's actually JGB futures flipped. So what it means is that Japanese government bond futures peaked in early 2016 and have been selling off really hard. So if you look at this chart and if you're inclined to say, oh, this is a clear buy, it's reversed, then perhaps this is a sign that one of the great bull markets in bonds, a bull market in bonds that's seen as even longer than the great U.S. bond bull market, may be coming to an end. Maybe. There have been a lot of false starts before, but it's interesting to flip the perspective. And from a chart like this, it's easy to construct an argument that maybe bonds have a further way to go down. down. It's kind of a fun way to look at it.
That is true. I feel like if that had been on a different scale, it was actually the currency and not the futures, then maybe I would have guessed it. But that's good. I'm also going to reuse a chart that I won. Actually, I lost. In my mind, I won Battle of the Charts, but actually I lost. This is basically looking at what's been going on in the stock market. I titled it We Heart Stocks because this has been just an incredible move into the equity market since the election. So basically what you're looking at here in the purple is the ETF Trust, the SPDR SPY, flows versus AA survey. Not the best for investor sentiment, but it gives you an idea. Look at that green box on the top right. It really pops there where not only are you seeing the bullish sentiment increase, but you're also seeing the money to back it up. So even though we've seen spikes like that in the past, you can really see all the flows going right into SPY. But what are they buying, Joe? That's what's answered in the bottom panel because this is basically a ratio of the Russell value to the Russell growth. I think this is very interesting because this essentially says that people are going in, finding companies that may not be overvalued, they're not growth companies. They're saying, you know what, there's actually deals to be had, and they're buying value companies at quite a bit of a pace relative to what they had in the past.
It's been a long time since they liked those value stocks, and so now finally finding some love post-election. Let's keep looking at the charts and see what else they have to say with equity indices near record levels and a little bit about what we can expect in 2017. Joining us now, Katie Stockton, BTIG Managing Director and Chief Technical Strategist. Katie, thank you very much for joining us. So what do we have in store for 2017? More highs?
More highs, I think, but also a more strongly trending market. And that's a really important takeaway because over the past couple of years, it's been a rotational tape where you have massive sector dispersions. And I think we'll see that narrow a little bit as the major indices extend their uptrends.
All right, let's take a look at one of these charts that you've brought in. We have an MACD buy signal on the S&P 500. There's few things going on in this chart. Why don't you all walk us through it?
So the MACD stands for Moving Average Convergence Divergence. It's a momentum indicator, and it had been on a sell signal for a long, long time. I'd say at least a couple of years, broadly speaking, until very recently it turned to a buy signal on the long-term or monthly view of the S&P 500. So that suggests that momentum is quite strong as we're seeing these new all-time highs for the S&P. From a shorter-term perspective, you're seeing a different picture where the MACDs or MACDs are actually rolling over. So short-term momentum may be weakening, but long-term momentum is strengthening.
So looking at this chart, we got a pretty positive flip in 2009. Looks like another example where we got a pretty strong sell signal based on this indicator.
We did, and the design of the indicator is to really eliminate some of the noise of the market and isolate important long-term trends. So it's telling us that we could be in the early innings.
I want to bring up another one here that you've got. This is basically shifting away from the equity market a tad, and we're looking at the 10-year Treasury. Basically, what you're seeing is a little bit of resistance that we're kind of approaching near that 3% yield level. What you're looking at is basically the 40-week moving average, and then you're charting that against this sort of breakout that we might have had, maybe not. How do we know when we actually break out of these things? What are you looking at?
So for me, it's really just my discipline, but I always wait for consecutive closes above a certain level. And on a weekly bar chart, which is what we're looking at here for 10-year yields, we need consecutive weekly closes above 2.5% to signal a breakout. So we'd see that potentially on Friday, which would then target next resistance of about 3%, a nice psychologically significant level as well, with an intermediate term time horizon, months, not years. So that's a very good possibility. At the same time, we are seeing some signs of upside exhaustion in yields based on a couple of indicators that we track. So it's not a guarantee.
What are those indicators? Because it's interesting. Very quickly after the election, there was such a sharp move that people were like, okay, this is overdone. And then it just kept moving past a lot of these levels where people say this might be getting much. But what are those signs of, as you put it, exhaustion where you can see a turnaround?
I look at short-term overbought, oversold measures, of which one that has been very relevant recently, or a set of indicators, would be the DeMark indicators. And you guys know Tom DeMark very well here as a third-party provider at Bloomberg. And some of his indicators are suggesting there's some exhaustion on the macro front, meaning yields, currencies, equities even are showing these signs of short-term exhaustion that do support a counter-trend move based on what we've already seen since Trump's election.
All right, you talk about RSIs. Admittedly, I'm not a big technical guy, but I love RSI because it's just a great way to characterize a sort of put a mathematical back into momentum. So let's dive into the terminal real quick. You can get this by going WEIB go on the terminal, World Equity Index Breadth. Now, this is incredible. This is basically showing you in red the number of companies with the percent of companies in the S&P 500 with an RSI over 70, so overbought, meaning they've rallied real fast. This is just a massive chunk of stocks. How long can that keep going when you have roughly, on average, the past, let's see, month here, about 25% of companies, about 20 to 25% of companies in the S&P trading above that level?
Well, you know, an overbought condition is sustainable on positive momentum. So as long as momentum remains positive, it is sustainable. Of course, we now have the situation where momentum is waning on a short-term basis, so that makes it more difficult to sustain those conditions. They are often associated with breakouts, and that tends to be a good thing for a while. But the breakouts at this stage are a little bit stale, so I think we do need to see a pullback, broadly speaking, with that overbought condition.
All right, this is always one of the more interesting charts. Ways to look at the market. It's a chart of rotations. And so we see, I think there's
momentum too, yeah.
Also another way of seeing momentum, where the money is leaving, where the money is flowing. There's been a lot of rotation since the election. People leaving formerly hot sectors of the market into ones that hadn't been getting love for a long time, like the financials. When you look at a chart like this, or look at visualize the rotations this way, what kind of information you can glean? By the way, look at financials, just way out in front. And almost off the chart, there's so much love for financials.
And it's really why we have to look at it, right?
Yeah.
It shows that sector dispersion that we're citing, where you've seen the bank stocks, for example, up in that far upper right corner.
Yeah.
Having outperformed very dramatically, and they get to the point where they look a bit stretched, and you see some of these short-term overbought, oversold measures, flash sell signals.
How often, I mean, that's like, how often do you see any sector so extreme in the corner like that?
It's fairly rare, right? And at a certain point, the momentum does fall off, and that's what we're looking for the financials, at least temporarily. And at the same time, we think it could occur to the benefit of the more oversold sectors of the market, and that would be those in the lower left quadrant there, which would include REITs and telecom and utilities.
Kind of like what we've seen today with that rally in REITs.
Yeah, we're seeing some inklings of that. Yeah.
Katie, I want to get your take on a sort of pet theory I have about the market, which is that when you talk about bear markets, it's usually the benchmark gauge loses 20%. Now, it went down 19% in 2011, but it never actually hit bear market. So you look at this rally that's been going on for 7 years. People say, oh, we're due for a bear market just because of age. But then we did an analysis where from August 2015 until roughly like March of 2016, almost 290 companies in the S&P 500 had gone through their own bear market. And it looked very much like what happens normally. Is it possible that maybe we're entering into a new cycle that could be potentially like an upswing coming out of a bear market?
That's what it feels like to me, in a way, looking at those longer-term momentum gauges, which had been deteriorating for so long, really since early 2015, now coming out of it based on that monthly MACD indicator that we looked at together. So to me, I agree there might have been somewhat of a latent bear market when you look from a bottom-up perspective, as opposed to look at the major indices.
Wow. Very interesting. We'll see if it can last. Katie Stockton, Chief Technical Strategist at BTIG. Thank you very much.
And the Russian ambassador to Turkey was shot to death at an art exhibit in Ankara. Russian President Vladimir Putin called it a provocation. We'll bring you the latest on that as we continue to cover that ongoing situation out of Turkey. This is Bloomberg.
I'm Courtney Collins. Let's get to Bloomberg's First Word News this afternoon. Tragedy in Berlin today as a truck rammed into a Christmas market, causing at least 9 deaths and injuring 50 people. Berlin police said the truck jumped the sidewalk and drove into the crowd at the market, which was set up near the Kaiser Wilhelm Memorial Church. A suspect has been arrested, and a passenger in the truck was among those killed. Police say they're still investigating whether the incident was an accident or an attack. The White House is strongly condemning the assassination of Russian ambassador to Turkey, Andrei Karlov. Karlov was several minutes into a speech at the embassy-sponsored exhibition in the capital of Ankara when a man wearing a suit and tie shouted Allah Akbar and fired at least 8 shots. That's according to an Associated Press photographer who was in the audience. Turkey's private NTV television says the gunman was killed in a police operation inside the exhibition hall where the attack occurred. The mayor of Ankara says the shooter was a police officer. NTV also said 3 other people were wounded in the attack. And a Zurich police official says a gunman has injured 3 people at a mosque in Switzerland's largest city. The official said police were swarming to the scene in pursuit of the gunman, who remains at large. Attacks by armed gunmen are rare in Switzerland. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Collins. This is Bloomberg. Joe?
For more on the assassination of Russia's ambassador to Turkey, shot dead in Ankara a few hours ago, we head to D.C., and Bloomberg News' Ben Holland, who is covering the latest developments for us. Ben, thank you very much. What are the latest developments from this incident?
The latest developments are that both Russian President Vladimir Putin and Turkey's President Recep Tayyip Erdogan have gone out of their way to portray this as something that's an attempt to undermine what's been a recovering relationship between them, rather than any kind of direct attack by Turkey on Russia. So it seems that both governments are determined to play down the effect of this killing on their relationship and emphasize that they're going to continue to cooperate, particularly in Syria, where their cooperation is crucial to the attempt to relieve the siege of Aleppo.
Ben, that's really what's at stake here, is that you've got two different countries here, 2 different nations backing opposite sides of a terrible crisis, and they had made some progress. Sort of give us the rundown on where they were, what sort of strides had they made recently?
Well, I think the most important strides that they've made are visible in the negotiations over Aleppo. The relief of Aleppo, the evacuation of civilians and fighters from Aleppo, is a very complex negotiation. It's tied to other sieges taking place in other parts of Syria. And these kind of negotiations really only work when the external backers behind the parties fighting in Syria are engaged in it. In the case of Aleppo, that's really been Turkey, which supports the rebels there, and Russia, which is the main ally of President Bashar al-Assad. So Turkey and Russia have really taken the lead in brokering, what's a very difficult and fitful attempt to get the civilians and some of the armed fighters out of Aleppo.
Ben, there have been significant protests in Turkey lately relating to Aleppo, relating to Russia's involvement in the situation. How does today's incident affect the domestic backdrop?
I'm not sure that it'll have a direct effect on the domestic backdrop in Turkey. There's certainly a lot of sympathy for the defenders of Aleppo in Turkey, and that won't change. But I think in terms of domestic politics, it probably doesn't have a huge impact in Turkey. I think it's the international politics where it could have an effect.
Ben, what can you tell us about the security provisions for ambassadors? When they're out, when they go to something like this, an art opening, what kind of security would typically be in place for them?
Well, I can't tell you anything in terms of numbers, but I mean, it's very clear that the host country is considered responsible for the security of an ambassador. And so whatever provisions Turkey made in this case, especially given the fact that it appears that the gunman was in fact an active duty police officer in Turkey, you can imagine that the Russians will be thinking that it's not adequate. And in fact, President Putin did say that they will expect solid, concrete security guarantees for their diplomatic offices in Turkey going forward.
We don't want to get ahead of ourselves, Ben, but when you start to think about how Russia can respond to this, if they do believe it's more than an isolated radical or person, is there anything that they potentially within the realm of possibility they could do on the ground in Syria and Aleppo to send some kind of signal?
I'm not sure there's very much they will do on the ground in Aleppo. I mean, in terms of the relationship between Russia and Turkey, we saw after the Turks shot down a Russian plane a year ago that if Russia believes that Turkey is threatening or attacking its interests, then it can carry out direct economic reprisals against Turkey, which it in fact did. So far, the comments from Putin and Erdogan suggest that neither side wants to treat this incident like that because they're trying to get their economic relationship back on track. But there will certainly be a knock-on effect for Turkey's economy in terms of tourism, I think, because even though the Russians have lifted some of the restrictions on Russians visiting Turkey, you can imagine a Russian looking at this news and saying, well, I don't want to visit Turkey anyway. It's not safe there. And Russian tourism is a huge business for Turkey.
Bloomberg News' Ben Holland, thank you very much for bringing us the latest on the situation.
All right, coming up, it's been an up and down year for the Japanese yen. We'll take a look at that and figure out if it's a safe haven currency or not. This is Bloomberg. I'm Oliver Rennick. It's time now for the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. Vivendi plans to buy additional shares in Silvio Berlusconi's Mediaset, stepping up a battle for control of the broadcaster founded by the former Italian Prime Minister. Vivendi says it will lift its stake to 30% of share capital and voting rights. Berlusconi is trying to keep control of the media company and today asked Italian market regulators to act in the dispute. And Boeing is shedding more jobs in the new year. At least 8% of the commercial airplane staff will be trimmed. The cuts will come through a mixture of attrition, vacant positions, and voluntary buyouts. The plane maker may also use involuntary layoffs. Carlyle Group is selling its majority stake in Claren Road Asset Management back to the fund's top executives. The move ends the private equity firm's 6-year foray into hedge funds. Claren Road started this year with $1.25 billion in assets, down from a high of $8.5 billion in 2014. The decline is due to losses and client redemptions. And that is your Bloomberg Business Flash update.
What'd you miss? It's been a very volatile year for the Japanese yen. Let's take a deep dive into the Bloomberg. You can find this and all the following charts using the function at the bottom of your screen. This in particular, this one's G #BTV 5399. And here's a cool way of looking at volatility of a currency. It looks at how many months in a year the currency moved either 5% up or down. And there were 4 separate months this year with 5% swings for the yen, the most since 1998. And, of course, there were a lot of big events that happened this year. There was the Bank of Japan's move into negative interest rates, which was quite a shocker earlier this year. There was the election. There was Japan's attempt to cap the long-term rates. So a very significant year in monetary policy sort of history and innovation. Interestingly, not a particularly volatile year by, say, many metrics, like, say, equities. But from a currency standpoint, it was pretty big, and it sort of also perhaps speaks to this general, we call it the EMification of global markets, where we really talk about the currency as being the key measure of a country, even more than bonds or stocks. And so quite a volatile year and a cool way of showing how long it's been since we've seen a year like this. Of course, last time was closer that we had the bubble and also the Asian financial crisis. So really speaks to what a year it was.
Not a great reference point to have there in 98, 99. It's also kind of inadvertently a Christmas chart here. You got some good colors. I like it. I'm going to check out real quick UK pension deficits because they're getting pretty expansive. This is from our buddy Kevin Kelly, our quant, if you will, over on the equity side. But he's branching out and he's looking at UK pension balances versus gilt yields. Now, these two follow each other, which you would somewhat expect. But what's interesting right now, you look at the white line, that's your UK bond. Then you're looking at UK pension balances. We know that this is an issue around the world, but we're looking at this right now just because of how hard, obviously, bonds there have gotten hit. Look at the deficit right now across UK pensions. I mean, it's just extreme. We haven't seen anything like this before. Question is, you see in the past where there are these dips, but they come back up. But how are you exactly going to get up to a reasonable level after just such an extreme move that we've had? I think it's going to be a big deal, not just in the UK, but it's also a big deal in the U.S. as well.
Well, it shows why these pension managers love the idea of higher rates because, of course, they all have these assumptions based on returns of 5 or 6 or 8%. And with rates at incredibly low levels, that's just completely implausible. Those deficits really start to shrink if rates can go up dramatically. So they're rooting for that.
You hope that there's some reversion and not just a new structural low. Up next, how the rapid growth in marijuana legalization across the U.S., Canada, and Mexico will have a significant impact on the tobacco and alcoholic beverage industry next year. This is Bloomberg.
I'm Courtney Collins. Let's get to Bloomberg's First Word News this afternoon. Tragedy in Berlin today as a truck rammed into a Christmas market, causing at least 9 deaths and injuring 50 people. Berlin police said the truck jumped the sidewalk and drove into the crowd at a market, which was set up near the Kaiser Wilhelm Memorial Church. A suspect has been arrested, and a passenger in the truck was among those killed. Police say they're still investigating whether the incident was an accident or an attack. The White House is strongly condemning the assassination of Russian ambassador to Turkey, Andrei Karlov. Karlov was several minutes into a speech at the embassy-sponsored exhibition in the capital of Ankara when a man wearing a suit and tie shouted Allah Akbar and fired at least 8 shots. That's according to an Associated Press photographer who was in the audience. Turkey's private NTV television says the gunman was killed in a police operation inside the exhibition hall where the attack occurred. NTV also said 3 other people were wounded in the attack. And a manhunt is underway in Zurich, Switzerland, after a suspect shot people praying in an Islamic center close to the main train station. 3 were injured during the shooting. Attacks by armed gunmen are rare in Switzerland. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Courtney Collins. This is Bloomberg. Oliver?
Thanks, Courtney. Let's get a recap of today's market action as stocks ended up closing in the green. S&P 500 and the Dow Jones even up about 20 basis points. The NASDAQ doing pretty well as well. They're up about 37. However, I also want to point out the Russell 2000 because small caps actually jumped about 0.5%. So back on track for their gains.
What'd you miss? Bloomberg Intelligence is out with its 2017 outlook. This week we'll have on analysts to break down the various sectors. Today we take a look at global consumer staples. Joining us now is Ken Shea, who is the group's global food, beverages, and tobacco senior analyst. Ken, thanks for joining us. Let's start with President-elect Trump's stated plans for U.S. deregulation policy and immigration reform. How does that affect the consumer staples industry?
Yes, well, it certainly does affect it. I think a lot of investors are showing a little caution towards the sector right now. It had been a good outperformer the last couple months, not so much. Immigration reform is a big one in the food and beverage industry. We know that the agricultural sector in the U.S. has a lot of undocumented immigrants. If there is a policy to deport them, that could raise, costs on agriculture and be a significant inflationary challenge for food and beverage companies.
Kenneth, we look at staples and we typically think about it as something that does well when there's risk out there, and it's particularly we got a good glimpse of that in January and February when the market was falling off. Staples was one of the only things that was doing decently. Are they going to be able to escape that sort of label as a safety stock? If things are going well, there's money getting pumped into the economy, are people going to buy staples?
That's a great question. Operationally, I think it's going to be a challenging year. Strong dollar that we're seeing right now is certainly going to be a big headwind, at these levels over the next quarter or two for this industry, which has a lot of large multinational companies, many of them in the U.S., think Coca-Cola, Procter & Gamble, and so on. So I think operationally you're going to see, a pressure on profits and sales going forward. That said, these companies are all embarked on sweeping cost-cutting initiatives. They've really accelerated them over the last few quarters. One, as a hedge to a stabilization and maybe a fear somewhat of some percolating cost inflation, for raw materials. And second, they're getting a lot of heat from activists, shareholder, activist M&A activity. A lot of these companies feel like they have to cut costs quickly to keep those at bay.
Speaking of consumer staples, one industry that's just done incredibly well over the long term is tobacco. This despite all kinds of regulations, lawsuits. The industry has been in the crosshairs, but it's done incredibly well. Now it has a new threat, which is the liberalization of marijuana laws, both in the U.S. and among our neighbors. Tobacco has a new competitor in the form of marijuana in places. In Canada, marijuana stocks have just exploded higher. How big of a threat is this? Are people going to start switching to a different drug of choice?
Well, there's a really a significant threat of that over time. I mean, Obviously, the U.S. food and beverage industry, alcoholic beverage industry, are large, and tobacco are very large industries. And although, the marijuana business, where it's legal, is a nascent industry, it's only about $7 billion, kind of a drop in the bucket right now. But nevertheless, the growth rates are compelling. I mean, if you consider this industry in the U.S., legal sales could move from $7 billion to $30 billion, a lot of analysts are saying, by the year 2021. As you mentioned, Canada looking to legalize it next year, and even Mexico is looking at legalizing it. You're seeing perhaps a North America legalization of marijuana over the next few years. That could be a significant threat to tobacco and alcoholic beverage companies.
Yeah, I was just going to say that tobacco is an obvious competitor. Same with alcohol, sort of a similar industry under threat for the same reason.
That's right. We have seen some evidence that there is a substitution effect. I think, cigarettes and marijuana, I think that's pretty reasonable to think. But even low-priced alcoholic beverages, namely beer, we think there is some evidence that there's a substitution effect as well.
I mean, Joe, just to remind you, you don't have to substitute. You don't have to choose between all three, right? But question, Ken, as this industry becomes more prominent, marijuana, aren't a lot of these tobacco companies going to say, hey, here's an industry that's growing, we've got a ton of money, and we can put them right into our sort of lineup and our structural pipeline? Is there going to be a lot of transactional stuff going on here?
I think so, but I think the tobacco industry will almost certainly wait until it's legalized at the federal level before they do anything on that front. But once it's done, I would suspect that shareholders, among others, will expect the companies to look into it. But like I said, until that happens, I think the tobacco companies will remain at bay.
All right, Ken Shea, consumer staples analyst for Bloomberg Intelligence. Appreciate you coming on.
Coming up, Nike investors are asking the company to just do it. That is, turn the stock around. Next, we examine the numbers that caused Nike's stock to lag the market this year, down almost 20%. This is Bloomberg. I'm Oliver Rennick. What'd you miss? While the S&P 500 has gained more than 10% this year, Nike's gone in the other direction, falling more than 18%. Analysts and investors worry about market share losses to Adidas and Under Armour in the U.S., which is Nike's largest region. So let's take a look at the numbers in today's The Numbers Don't Lie. Nike has been roiling since the recession in the face of competition, with the stock averaging annual gains of 26% over the past 7 years. But as you see, 2016 has been an entirely different story, and sentiment has only gotten worse for the world's largest sports brand. Analysts' average 12-month price target has fallen since the beginning of the year, with Bank of America downgrading the stock on Halloween, saying the company lost ground in a critical area, innovation. The main driver for this stock drop in sentiment is the decline in futures orders for North America. You can see this key factor of demand rose just 1% in its fiscal first quarter. Though Nike said the orders aren't a proxy for revenue, and it remains confident that North America will continue to be a strong region. When you look at the futures globally, you see where North America stands compared to other regions for Nike. China, which generates about a quarter of the company's operating profit, is its biggest growth driver, which is positive for Nike, as athletic merchandise sales in China tend to have profit margins above 30%. One area for revenue growth is Nike's training segment. The orange bar is here, which grew by more than 50% over the past 5 years. Still, though, the company's fortune largely rides on running, which is the yellow bars, and basketball, which you can see in the pink. Building on endorsement deals with many high-profile professional players, Nike became the largest seller of basketball shoes. It's more than 90% of the U.S. market. So be carefully watching Nike's results when they're released after Tuesday's U.S. closing bell with earnings. Joe?
What do you miss? Cornell Tech at Bloomberg is a special series of conversations with luminaries of the technology world. As part of the series, our own Scarlet Fu got the opportunity to speak with Neil Blumenthal, a co-founder and co-CEO of Warby Parker, the eyeglass retailer. Neil discussed his leadership style and how he has set up the company.
We have an open office layout, just like here at Bloomberg. We have regular meetings every week, which we lock ourselves in a room anywhere from an hour to a couple hours, talk through all big issues. We take those meetings seriously and prepare an agenda, just as we expect all of our sort of direct reports to do when they're meeting with us. Sitting next to each other allows us to actually interact throughout the day, and there's a perception, which I think is mostly true at Warby Parker, where if you say one thing to one of us, the other one knows pretty quickly. And one of the things that we're always worried about is, hey, you go and tell mom one thing, and then they say no, you go to dad. And we've been able to avoid that completely. We also have clean reporting lines where one of us is, for our senior leadership team, is primarily responsible for a specific area of the business, and that executive or department head. And, you know, it's really nice to actually have two people that can be the face of the company, and then we can swap in and out if there's a speaking engagement, if there is a meeting with an investor. And it just we found that it gives us a lot of leverage. Sure, there's probably a little bit more of a communication burden than if you're just a single CEO. But I think what it also does is that it forces us to be more thoughtful. So before I would, go and implement anything really big, right, Dave and I would talk it through, and that it's a good sort of a stress test.
Has there been an instance when it didn't work, or you had to work through something that was really difficult, and you can share that anecdote with us where you were really challenged and for a moment you were thinking, you know what, this is not how it's supposed to work, this is not ideal, but you got through it?
I don't have a great anecdote.
Or you don't want to share one.
Well, I think what we've done is really try and create release valves so that way there's never that blow up, right? Because I think everybody envisions that, right, founders or, co-CEOs, there must be massive conflict at one point, and then people just go at it, and then they do irreparable harm to the relationship. And I think what we do is make sure that we're in communication regularly, so that way we know what's going on, so there are no surprises. We give each other feedback, again, so stuff doesn't bottle up. And that actually comes from when the four of us were starting the company, when we were all getting our MBAs at Wharton. We would, on a monthly basis, it sounds pretty cheesy, but we would go to a bar and put each other in the hot seat and go around the circle. Hey, you're doing this well. Hey, this can be improved. improved. Hey, when you shoot me a 10-page email at 2 in the morning, I want to reach through the computer screen and strangle you. You know, that prevents from there being these massive blow-ups. And you also start to learn a lot about the people that you're working with. So, for example, right, when I got a 10-page email at 2 in the morning, that was a bunch of ideas about the area of the business that I was responsible for, that I was already doing, my reaction was like, man, you know, does he not trust me? Does he not think that I'm capable of doing my job? Does he think I need these ideas? But when you actually start talking through it, it's, oh no, it's just excited about the business, and these were top of mind. I wanted to share it with you. And it's often human nature to go negative and get very defensive. And that actually led to one of our core values as a company, which is to presume positive intent. And most of the people that we hire are great people. They're coming to Warby Parker because of our mission, and they generally act with integrity and with the right intent. Sometimes the outcome's not the desired one, but we don't, at the very beginning, we shouldn't question somebody's motives or intentions.
That was Neil Blumenthal, Warby Parker founder and co-CEO.
All right, coming up, after Russia's ambassador to Turkey was shot dead in Ankara, tensions over the Syrian conflict are heightened. Julie Hyman and I spoke with Ian Bremmer, president of Eurasia Group, earlier today on what this means for the geopolitics across the region. We'll bring you that conversation next. This is Bloomberg. Russia's ambassador was shot dead in the Turkish capital today, an assassination apparently linked to Syria's civil war. Russian President Vladimir Putin saying that the killing was an, quote, open provocation aimed at undermining the search for peace in Syria. Last hour, Julie Hyman and I spoke with Ian Bremmer, the founder and president of Eurasia Group. He discussed if we know anything yet outside that a single individual committed this act.
No, we don't. We know that it's someone who infiltrated the Turkish special police forces, which talks about the fact that Turkey needs to do a much better job in terms of its own internal security. That's not a surprise given the extraordinary amount of terrorism we've seen in Turkey over the course of the last 12 months. But look, both Russia and Turkey have strong reasons to want to work more closely together, both globally as well as in their backyards right now. And they also have terrorist organizations that they want to do their best to point as the villains. Now, those aren't the same organizations all the time. The Turkish concern overwhelmingly is about Kurdish separatist groups, both in Syria and in Turkey. In the case of Russia, it's much more about a number of rebels on the ground in Syria, many of which are involved in al-Nusra, but some of which are not. But that won't stop, I think, Erdogan and Putin from coordinating quite closely in coming weeks and months in terms of both saying they're going to do everything possible to root out Islamic militancy in their own countries and, of course, in Syria.
And, of course, Ian, recently we have seen Erdogan with new crackdowns within his country following the attempted coup on the press, on the education system. Can we expect further crackdowns like that, or will this kind of action be different?
No, we definitely can, but let's also keep in mind that this is part of the problem. I mean, Erdogan has been enormously concerned about, sort of those that would fight against him within his own military, within his own police forces, and he's had significant purges inside the military even before the attempted coup a few months ago. He stepped that up afterwards. Now, that absolutely makes the military less directly dangerous to him, but it also weakens the ability of Turkey's own defenses to root out potential terrorists. And, of course, there are millions of refugees in Turkey right now, over 2 million from Syria itself. The border between Syria and Turkey is extremely porous. It's extremely hard for Turkey, even if they had done none of that against their own defense forces, to be able to effectively defend against radical Islam. I mean, look at what's happened in Germany and France, in the Netherlands over the past 12 months. Turkey's been vastly harder than that to deal with. And I think what we're seeing today, unfortunately, it's aimed at the Russian ambassador. In the past, it's been aimed at tourists and been aimed primarily at Turkish citizens and at the Turkish government. But it's all pieces of the same puzzle.
And we've just gotten an additional headline from Vladimir Putin saying that the killing of the ambassador, the killing of the envoy, is an attempt to ruin Russia-Turkey ties. It seems, though, from what we've been talking about, that is not going to be a successful attempt. I mean, what do you think this assassination accomplishes, if anything? Does it bring more attention to the situation in Syria and in Aleppo?
Well, I mean, the fact is that Aleppo is almost the past story, in the sense that for the last 5.5 years, the world has been talking about the humanitarian crisis around an entire country that's been destroyed. And, with the exception of the Russians supporting Syria's Assad, very few have been willing to do much about it. The U.S. has given a lot of humanitarian aid, but no one's prepared to try to create or strengthen, latent democratic institutions in Syria, such as they are. They're very weak. The Americans haven't found the ability to work with people, and they're certainly not going to put large numbers of boots on the ground. So I don't think you're going to see success or more attention to this issue going forward. I think what you will see is that, both, not only did Putin say that about not ruining the relations, but you also saw the exact same turn of phrase from the mayor of Ankara. Erdogan himself, very similar. This is being coordinated by Erdogan and Putin directly. Let's face it, if this had happened, this exact same attack had happened just 6 months ago, before the attempted coup in Turkey, this is when Turkey and Russia were having a Cold War. This could have been incredibly dangerous indeed. This could have led to a very significant escalation of Russian military in the region on and maybe even into Turkish airspace. Right? That didn't happen. We now already have the rapprochement, and now Putin and Erdogan see it very much as in their interest to work with each other. This is the United States. These are two countries that don't have to worry about freedom of press. They don't have to worry significantly about opposition parties. Both Erdogan and Putin, if they decide that they want to work with each other, they can, and that's exactly what's going to happen here.
That was Ian Bremmer, Eurasia Group president and founder. It's time now for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. Goldman Sachs is close to raising more than $1 billion more than its target for a new pool of capital dedicated to buying stakes in funds managed by other buyout firms. That's according to people familiar with the matter. The bank is now closer to $6 billion of funding compared with the original $5 billion target. Goldman Sachs is now deciding how much each backer can contribute, with some potentially receiving less than requested, despite the increased size of the pool. General Motors will temporarily close 5 factories next month as it tries to reduce a growing inventory of cars on dealer lots. The factories will close in anywhere from 1 to 3 weeks. Across 2 of the plants in Michigan and others in Kansas, Ohio, and Kentucky, just over 10,000 workers will be idled. And John Bryce, former president of Cargill's asset management unit Carval Investors, has agreed to settle a lawsuit over his ouster. That's in return for an undisclosed payout. According to people familiar with the matter, Bryce, who was forced out as the head of Carval in June, dropped his suit and agreed to pay his own legal fees under the terms of the deal. And that's your Bloomberg Business Flash.
Coming up, what you need to know for tomorrow's trading day. This is Bloomberg.
What'd you miss? A pretty interesting day in the markets here where we had stocks kind of bouncing around, ended up positive on the day. But really, as you pointed out, I think the most interesting moves was probably in the bond market.
Yeah, bond market, we saw pretty solid decline in yields. A lot of movement around the various events today. Yeah. Turkey, Russia, Germany, the Yellen speech. A lot of intraday action there.
Yeah, unfortunately, a lot of geopolitics. Don't miss this, though. The Bank of Japan policy decision.
And I'll be looking tomorrow at UK Prime Minister Theresa May. She'll be questioned by the House of Commons Liaison Committee on her plans for exiting the European Union. That's at 9 a.m. Eastern Time.
And don't miss this either. Finnish unemployment is out tomorrow.
Everybody's getting up at 2 a.m. tomorrow to see if Finnish unemployment drops below 8.3%.
All right, that's all for What'd You Miss. Thanks for watching.
Have a great evening. This is Bloomberg.
One evening.
I'm Courtney Collins, and you're watching Bloomberg Technology. Let's start with a check of your Bloomberg's first word news. A truck rammed into a Christmas market in Berlin today, causing at least 9 deaths and injuring 50. Berlin police said the truck jumped the sidewalk and drove into the crowd. A suspect is under arrest, and the passenger in the truck was among those killed. Police say they're still investigating whether the incident was an accident or an attack. The White House is strongly condemning the assassination of Russian ambassador to Turkey, Andrei Karlov. Karlov was several minutes into a speech at the